Well, let's delve back into the equity space. Eugene Goosen, Portfolio Manager at ORA Fund Managers, is standing by. Eugene, thanks for joining us, of course, joining us from Cape Town. So talk to us right now about your views on the level of the market here in South Africa, because we're slipping, we keep on moving around kind of key record levels. We edge ever so high and then we slip back. We've been talking about US Treasury yields slipping back below 2%. We see the equity markets in the States on the back foot right now. So what is your sense as to where the market's headed?
Yeah, hi. If we look at the US equity market as a starter, because we're so correlated with it, they had a fantastic run, and I think we are moving in the global markets into a space where earnings growth anticipation is getting more and more positive. That will drive a re-rating in Ps, and I think that is what we are seeing in the US and to a small extent in Europe as well. And I think we are simply following that. However, saying that, we are definitely seeing some rotation in the local market. We have seen a fair amount of volatility in our retailers and in our banks lately, where guys come in, cut a little bit. The retailers have pulled down quite a lot over the past couple of weeks, the banks a little bit, and rotating into more cyclical stocks. So if we look at the market as a whole, I think pricing fairly valued. We're most probably going to see the market up 12-15% for the year on average, but I think if we go sector specific, your more cyclical stocks, your BHP Billetins, your Anglos of the world will most probably deliver better returns over the next year, 2 or 3.
Mm-hmm. Let's talk about teleco stocks today, because Vodacom hard hit on the day, down over 4%. Now, looking at that trading update, a 1.7% increase there in interim group revenue. That's to 18.3 billion rand. 12% increase in active customers. So, of course, still the biggest mobile operator here in South Africa, 51 million customers. So drill into the numbers there. I mean, what was so disappointing for the market?
If you look at this business, it's developed into an extremely mature type of business, pumping cash, doing very well in that sense. However, if you look at the expansion potential in the domestic market, it's very limited. If you look at their ARPUs, disappointed in the domestic market. In other words, the bang for your buck, or the value that they're getting on account paying customers per month is slightly lower than what the market expected. The local services business is not performing the way that the market expected. The international side did better. So it's a very competitive environment. We're seeing the smaller guys cutting prices to eat around the carcass, as one can say. And I think this business, the potential for margin expansion is very small. On the contrary, I think they're most probably going to have margin contraction, and the potential for domestic sales in South Africa is also getting more and more limited. Competition is fierce in the market, although they're still operating in very healthy margin, in a very healthy margin space. So yeah, all in all, the company is making tons of money, but it's not as much money as we would have liked it to see, and the foreign side is not giving it the kicker that it needs.
So I mean, we saw a sell-off in the stock, just over 116 rand today. If the company is not making as much money as you would like, is there reason enough to then sell Vodacom and perhaps put it into a company that is proving to offer the returns that you're looking for?
Well, maybe one can say you're going to own less Vodacom than you would normally would, or I would not buy it at these levels. Maybe it should sell off a little bit more. I think it's trading at around forward Ps of around 13 times earnings. So if it comes down to around 11 and a half times forward earnings, I think it's more reasonably priced. This is typically what we are seeing. This is a very defensive type of asset. In other words, it generates very constant cash, grow earnings to a reasonable extent. It's not going to shoot the lights out in a bull market like Billiton will do. So you're going to hold some of this, but you're going to hold less, and you're most probably going to hold more cyclical stocks over the next 2-3 years. So the company is also in a process of growing, especially the data business, and that's also one part of the South African side that we expected to see a slightly better result, bit more cash out of the data business. That didn't materialize.